Two of the biggest retailers in America just gave us a warning. Home Depot says people are pulling back on big home projects. Walmart says higher income shoppers are showing up to buy cheaper groceries. And when that happens, you pay attention. Hi, everyone. I'm Daniel, and this is American Affordability. And today, I want to talk about something I think a lot of people already feel in their day-to-day lives. The economy may not look like it's falling apart on paper, but when you look at how people are actually spending money, you start to see a very different story. People are fixing instead of replacing. They're delaying big purchases. They're driving cars longer. They're shopping for cheaper groceries. They're avoiding remodels. They're thinking twice before buying houses. And honestly, that tells us a lot more than some headline about the stock market or GDP. Because most people don't live inside of a spreadsheet. They live inside a monthly budget. And that monthly budget is getting tighter. Let's start with Home Depot. Home Depot is one of the largest retailers in the country. And it's not just a store where people buy tools, it's a real-time signal of what homeowners are doing. When people feel confident, they remodel kitchens, they upgrade bathrooms, they replace appliances, redo flooring, or change out windows, or add patios and decks. They paint rooms, they take on projects. But when people feel uncertain, they do something very different. They fix what they already have. And that's what Home Depot is seeing. Excuse me, people are pulling back on bigger non-essential purchases. Appliance sales, they've been weak. Large remodeling projects are slowing down. And instead of replacing things, more people are spending money on repairs and maintenance. Plumbing, electrical, small fixes, basic upkeep. Things that keep the house functioning without spending $10,000, $20,000, $50,000 on a major project. And I think most of us understand that instinct. I mean, if your dishwasher still works, you may not love it, but you keep using it. Or if your kitchen's outdated but functional, you live with it, right? If your flooring's ugly but not falling apart, you wait. Because the money has to come from somewhere. And right now, for a lot of households, there's just not as much extra money sitting around. And that's the part people need to understand. This is not just about Home Depot selling fewer cabinets or fewer refrigerators. This is about regular people deciding, I can't justify that purchase right now. And when millions of people start making that same decision at the same time, that tells you something about the economy. According to reporting around Home Depot's outlook, consumers are spending roughly $22 billion less than expected in key home improvement categories. And the categories where spending is slowing are things like bathrooms, flooring, kitchens, windows, blinds. I mean, look at those categories. Those are mostly upgrades. They're nice to have. They make your home look better. They may improve your quality of life, but in most cases, they're not emergencies. I mean, if your bathroom works, your kitchen works, and your floor is not falling apart, you can probably delay that project. And that's exactly what people are doing. They're delaying. They're stretching. They're making what they already own last longer. And it's not just the house. Look at what's happening with cars. People are driving their cars longer because replacing them has become ridiculously expensive. I mean, a new car can easily be around $50,000. Monthly payments are often around $700, $800, or even more. And more than 20% of new car buyers are paying over $1,000 a month. I mean, that's not a small car payment. That's a second rent payment for a lot of people. And when your car payment looks like a rent payment, that affects everything else. It affects your ability to save. It affects your ability to invest. It affects your ability to qualify for a mortgage. It even affects whether you can handle an emergency. So people are doing what makes sense. They're holding on to their cars, right? They're fixing them. They're trying to avoid another huge monthly payment. And honestly, I don't blame them, because this is the real affordability story. It's not one thing. It's everything stacking up at the same time. I mean, we talk about it now here all the time on my channel, and we already know housing is expensive. Cars are expensive. We know that insurance is outrageous. Groceries are off the charts right now. Utilities, I mean, they just keep going up, it seems. Credit card debt and interest, expensive. Interest rates on other loans, mortgages, expensive. And eventually people start asking themselves, what can I avoid buying? I think that's the shift right now. People may still be spending, but they're becoming much more selective. And that brings us to Walmart now. Walmart is a really interesting economic signal, because Walmart doing well does not always mean consumers are doing well. Sometimes it means the opposite. And sometimes it means people are trading down. They're looking for cheaper groceries or cheaper household items. They're looking for cheaper basics, really cheaper everything. And Walmart's now seeing more higher income customers shopping there. And that's important, because Walmart has traditionally been known for lower and middle income shoppers. But now more higher income households are showing up too. And that right there tells us something. It tells us that this pressure is not only hitting people at the bottom or in the middle, it's moving up the income ladder. And this is where I think a lot of people get confused. They assume that if someone makes a higher income, they must be doing fine. But that's not always true. A household can make good money and still feel squeezed if their expenses are out of control. I mean, maybe they have a large mortgage, or maybe their property taxes went up, or their homeowners insurance might have increased. Or like we just mentioned, maybe their car payments are huge. Maybe they have student loans or credit card debt. They have children. I mean, childcare could just be eating them alive. Maybe they live in an expensive area and their income does not go nearly as far as what people might think. So yes, they may look comfortable from the outside, but inside the budget, it may be a totally different story. And this is why the Walmart trend matters. When higher income households start looking for cheaper options, it tells you affordability pressure is spreading. I mean, this is not a sudden crash. It's more like a slow squeeze. And honestly, I think that's what makes it so frustrating for people. Because it's not like one day everything fell apart. It's more like every month something got a little more expensive. Groceries went up, then insurance went up, then the electric bill started creeping higher, then insurance started to tick up, then that car repair costs more, or gas costs more. Their credit card balance got harder to pay down. The house project got kicked down the road, delayed a little bit. And after a while, people look around and realize that their overall lifestyle has changed. They may not even have made one big dramatic decision. They just slowly adjusted. They stopped eating out as much. And then maybe they stopped buying certain brands. And then they stopped planning certain trips or vacations. Then after that, they stopped replacing things as quickly. Then they started shopping around more, looking for deals. And eventually they start saying no to purchases more often. And if that sounds familiar, if you've quietly cut something from your budget in the last year, I want to hear about it in the comments. What was the first thing you stopped spending money on? I'll read every one. I'll try to respond, because that's the part of this economy that doesn't always show up in the headline numbers. It shows up in people's daily choices. And that is exactly the kind of shift that retailers notice before almost anyone else. Because Walmart and Home Depot, they see what people are actually doing with their money. Not what people say in a survey, and definitely not what politicians are saying in a speech, but they're talking about what people are actually buying or not buying. And this is where I think the economy feels very different depending on who you ask. I mean, if you ask someone who owns a home with a low mortgage rate, no car payment, and a good income, they might say things are expensive, but we're fine. But if you ask someone renting, carrying a car payment, dealing with credit card debt, trying to save for a house, trying to buy groceries for their family, they might say, I don't know how people are doing this. Both people are living in the same economy, but they're not experiencing the same economy. And that's one of the biggest themes of American affordability right now. The average number does not tell the full story. The lived experience does. And right now, the lived experience of millions of Americans looks like this. Every month, something goes up. And every month, something gets cut. That is the slow squeeze. And once you see it, you start seeing it everywhere. You see it at Home Depot when people stop remodeling and start repairing. You see it at Walmart when higher income shoppers start looking for cheaper groceries. You see it in the car market when people hold on to vehicles longer because the replacement cost is ridiculous. And you see it in housing when people want to buy, but the math simply does not work. And that is why these retail warnings matter. They're not just corporate updates, they're signs of how American families are adjusting. One purchase at a time, one bill at a time, one delayed project at a time. Now, one place where the lived experience is getting harder is housing. One thing I don't think gets enough attention is how rising car costs are affecting people's ability to buy homes. Cars and homes may seem like separate issues, but in real life, they are connected. Because mortgage lenders look at your debt to income ratio. And that means they look at how much money you make compared to how much debt you already have. And a big car payment can reduce how much house you qualify for. I mean, if one person has no car payment and another person has a $1,000 monthly car payment, those two people are not in the same position when they apply for a mortgage. And that's even if they make the same income. The car payment matters. It can reduce buying power dramatically. And that's one reason a lot of people are stuck. They may want to buy a house, they may have decent income, but between rent, groceries, insurance, credit cards, student loans, car payments, there's not enough room left. And I think that's why more people are realizing that qualifying for a mortgage is not the same thing as being financially ready to buy a house. Those are two different things. A bank might approve you, but that does not mean the payment will feel good. That does not mean you will have breathing room. I mean, that doesn't mean either that the house is a good decision. It just means that the bank thinks that you're likely enough to pay them back. And that's not the same as financial peace. And honestly, I think a lot of people are right to be cautious because nobody wants to become house poor. Nobody wants to buy a house and then have no money left to live. Nobody wants every repair to become a crisis. And nobody wants to be one job loss or one medical bill away from panic. So when buyers say, I'm going to wait, or I need to pay down debt first, or I need to get rid of this car payment before I buy, that's not failure. That right there is wisdom. Paying off debt before buying a home is one of the smartest things people can do. Every payment you eliminate gives you more flexibility. And in this economy, flexibility matters. Because the more fixed payments you have, the less freedom you have. Mortgage, car payment, credit card payment, student loan, HOA fees, insurance, utilities. I mean, at some point, your paycheck is already spent before it even hits your account. And that's how people with decent incomes still feel broke. It's not because they're irresponsible, I mean, not always, but because modern life has become a pile of monthly payments. And the pile keeps getting taller. Now, I want to give you an example that shows how strange the housing market's become. There was a home listed for rent starting in, this was in 2022, right? And the owners initially wanted about $16,000 a month. Not $1,600, $16,000. Eventually they lowered it to about $12,500. It still didn't rent. Then they removed the listing, put the property up for sale at around $3.9 million. And then they cut the price by about $400,000. And even after those cuts, there still wasn't much interest in this house. Now here's the part that matters. At current interest rates, the mortgage payment on that kind of property could be close to $24,000 a month. So think about that. If nobody wanted to rent it for $12,500, why would a buyer be excited to pay almost double that every month to own it? And that example shows one of the biggest problems in the market. It's that the payments simply don't make sense. And this is true at different price levels. It's not just luxury homes like this one. The same basic issue applies everywhere. If the monthly payment doesn't line up with local incomes, something has to give. Either prices come down, rates come down, incomes rise, or buyers stay on the sidelines. And right now, a lot of buyers are staying on the sidelines. And that's why home sales are so weak. It's not because people suddenly stopped wanting homes. People still want homes. They want stability. They want space to call their own. I mean, they still want a place to raise a family. I mean, it's part of the American dream. But wanting something and being able to afford it are not the same thing. Demand is not the same thing as affordability. And that is one of the biggest mistakes people make when they talk about the housing market. They say, oh, there's so much demand. Okay, but at what price? At what interest rate? Or at what monthly payment? What's the insurance cost? What's the property tax bill look like? Because everybody wants something until they see the payment. And when the payment is too high, demand, guess what? Yeah, it disappears very quickly. Now, there's another housing cost that I think more people are starting to pay attention to, especially here in Florida. Millions of Americans are paying HOA fees that add thousands of dollars a year to their housing costs. And in some communities, people are paying more than $500 per month. It's not per quarter, that's per month. So that's over $6,000 a year. And in some condo communities or high cost markets, it can be higher than that. Now, to be fair, HOA fees are not always useless. Sometimes they cover landscaping, or they cover exterior maintenance. Sometimes they cover building insurance. Sometimes they cover amenities like a pool, a gym, a clubhouse, security, sometimes even utilities. So I'm not saying every HOA is bad, but the cost matters. And those fees are rising. And a lot of communities are dealing with aging buildings, with deferred maintenance, with higher insurance costs, and special assessments. And especially here in Florida, this is becoming a much bigger issue. You can see a condo that looks affordable based on the purchase price, and then you look closer and realize the HOA fee completely changes the math. For example, a $350,000 condo with a $900 monthly HOA is not the same thing as a $350,000 house with no HOA. That fee affects your monthly payment. It affects your debt to income ratio. It affects your resale value. And it also affects buyer demand. And it affects whether the property is actually affordable. I mean, that's why some buyers are backing out of deals after discovering upcoming fee increases, special assessments that can cost literally tens, and I've seen on the news, hundreds of thousands of dollars in special assessments. And so, I mean, honestly, I understand why. Because if you're already stretching to buy the property, the last thing you want is a surprise fee increase that adds hundreds of dollars to your monthly costs. I mean, that can just break the deal right there. And this is one more reason the housing market feels stuck. It's not just the mortgage rate. It's not just the home price. It's the total cost of ownership. Mortgage, taxes, insurance, HOA, maintenance, repairs, utilities, special assessments. And once you add everything together, a lot of properties that look affordable at first are not actually affordable at all. And that's the bigger picture. Home Depot is seeing people delay renovations. Walmart is seeing more people shop for value. Car payments are interfering with mortgage qualification. HOA fees are making housing more expensive. And buyers are becoming more cautious. These are not random separate stories. They're all connected. They all point to the same thing. American households are under pressure. And people are responding by pulling back. They're trading down, they're delaying purchases, and they're trying to protect whatever financial breathing room they still have. And honestly, I think that's rational. If your budget is tight, you should be careful. If you have debt, you should think twice before adding more. If your emergency fund is weak, you should probably build that before taking on a massive mortgage. Or if your car payment is eating your paycheck, you should understand how that affects every other financial goal that you have. I mean, this is not about panic. This is really just about awareness. Because the worst thing you can do in an economy like this is pretend that the numbers don't matter. I mean, really, they do matter. The numbers are the difference between feeling stable and feeling trapped. And I think that's what a lot of people are trying to avoid right now. They don't want to be trapped by a mortgage. They don't want to be trapped by a car payment. They don't want to be trapped by credit card debt or by an HOA fee that keeps on rising. People want options. They want flexibility. They want breathing room. And breathing room has become one of the most valuable things in the American economy. So when you hear that Home Depot is warning about weaker remodeling demand, don't just think, oh, well, people aren't buying cabinets. You need to think people are protecting cash. Or when you hear that Walmart's attracting more higher income shoppers, don't just think, well, Walmart's doing well. You need to think people with good incomes are also looking for cheaper options. Or another example, when you hear that car payments are reaching $1,000 a month, don't think, well, cars are expensive. You need to think that payment may be blocking someone from buying a home. And when you hear that HOA fees are rising, don't just think, well, that's annoying. You need to think that could be the difference between a property being affordable or unaffordable. I mean, that's the real story. It's not one warning sign, it's all of them together. And the question is not whether people are noticing, because they are. The question is, how long can people keep adjusting? How long can families keep cutting back? How long can people delay purchases or hold on to older cars? How long can they absorb higher insurance, higher groceries, higher housing costs, and higher debt payments? I mean, at some point, the budget runs out of room. And that's why I think these retail warnings really matter. They're not just about Walmart. They're not about Home Depot. They're about the American household. And right now, the American household is telling us something very clearly. People are tired of being squeezed. They're tired of every basic part of life getting more expensive. And they're tired of feeling like they make decent money, but somehow still have less left over at the end of the day. That is the affordability crisis in plain English. It's not a crash. It's not a panic. It's a slow squeeze. Every month, something goes up, and every month, something gets cut. So if you felt this video in your own life, share it with someone who needs to hear it. And subscribe if you want to keep talking about the real economic story behind the headlines. I'm Daniel. This is American Affordability. Thank you for watching and for supporting this channel. And as always, I'll see you in the next one.